running a business is a tough and lonely journey. Welcome to the Executives on the Front Lines podcast, where business owners and C-suite executives like you will get real answers to your everyday business problems. I'm your host, Jeff Palacio, and together we will learn from senior leaders who have occupied every top box of a company's org chart for every size organization and who like to roll up their sleeves while checking their egos at the door. Welcome to Executives on the Front Lines. How are you today?
I'm doing great. How are you doing?
Yeah, so I'm in Kansas City. You're in lovely
Dallas, Fort Worth, right
yeah,
between, right close
yeah,
to DFW Airport.
yeah. Maybe after this, I can take a quick flight down there. We go to Billy Bob's together.
That'd be fun. I love Fort Worth. Always happy to show off that wonderful town.
Yeah, it is nice. It is nice. I stayed at a sales meeting, regional sales meeting down there, one of my companies, and the haunted hotel is at the Stockyard.
Stockyards, yeah.
Yeah,
Also,
yeah.
Bonnie and Clyde stayed there too.
Oh, wow.
They actually did. Yeah,
Nice.
yeah.
Now, the real Bonnie and Clyde or Warren Beatty and
Nope,
Faye Dunaway?
nope. The real Bonnie and Clyde were in this area. I'm like right outside of Grapevine, Colleyville, and they robbed a bank in Grapevine too, or so the
Nice.
lore is. Robbed a bank. I know that there was a fight outside of Grapevine, but they actually stayed at a room in the Stockyards Hotel. The real Bonnie and Clyde
Oh,
did.
nice. Love it. Love it. Love it. So yeah, we're going to talk about a little bit about fractional CFOs, but Lisa, why don't you tell the audience a little bit about yourself?
Yeah. I'm a CPA by trade, and I started out in public accounting and with Ernst way back when. But over time, I worked for large Fortune 100 companies. But I fell in love with privately held companies when I worked in the healthcare space. That was where I got to see the entire gamut of tax, accounting, HR, like what makes a business run. And I can tell you the one thing they didn't teach me in college that I really wish that I had known is, do you know how you learn a business, or what I think the best way to learn a business is? Do you have any
What?
idea?
Uh,
I
um, well, being right in the middle of the business or uh,
read the contracts, read the
read.
dang contract. What are you obligated to provide? What are your rights? And just read the contract, especially when you go into a different industry, read the contracts with the clients, and that will get you far and ahead of understanding the business and the business model. But anyway, when I was in the privately held space, that's when I fell in love with what I do now. And then my husband and I started our own business over a decade ago, manufacturing oil field equipment. And I was able to utilize the HR, the accounting, the finance, all of that to kind of help us build up our company and exit. And then eventually, I kind of looked around after being my own boss for over a decade. I needed something else to do, and I still was excited about helping privately held companies. And I'm one of those people that need to stay busy. My husband honestly isn't. He can be happy just like sitting on our back porch, but I can't. And so I started a consulting practice, going out and helping privately held companies, grow, get ready to sell, whatever it is they need to do, using the fractional CFO role to do that.
Yeah, well, we're obviously going to dig deep into that. But so over a decade working with your husband, and you're still married, is that correct?
We are, yes,
Wow.
we are. And I tell you, a lot of people have asked me about that because working with your spouse, and many family-owned businesses will understand this, is not the easiest thing to do. You're at home together, you go to work together. So, how do you manage that? Well, one thing we did was we drove separate cars to work because I needed my space away from him. And we're very different individuals. I like to listen to country music or something else on the way to work, and he wants to listen to news radio. I tend to come into work later and work later, and he would get up earlier. And so we kind of had our little anonymity and separation by being at work and driving to work separately. The other thing, though, that drove him crazy is we would come home, and in the evening, I would start asking him questions about, projects or jobs or things we were working on. And he finally had to say, time out, wait a minute. Work ends at work. We're at home. Take your Lisa Cobb CFO hat off, and you can save that question for tomorrow. And he had to put up some boundaries because I had a tendency to leak over more into our personal life. in that. So we had to put up some kind of boundaries around that to keep work at work to the extent that we could. Now, many times, when you own your own business, I mean, you're, princess and janitor at any given moment. And so to the extent that we were able, we kind of put up some boundaries around when we could talk about work. So that was one thing that helped keep our marriage where we didn't divorce each other. You know what the other thing was? He
What?
said he couldn't divorce me because I was the CFO and I knew where the money was and he didn't.
I love it. I love it. Um, well, and yeah, and obviously, I think that's what a lot of people had trouble with the pandemic and starting to work from home. There was no transition time. In the pre-COVID corporate life, you drove home from an office, most of us, and you had some, decompression time. So that I love the way, you did the driving separate thing because that kind of allowed you relax listening to little country music. He was relaxing, listening to talk news. So yeah,
Yeah,
that's
we
great.
drove together a couple of times. And I mean, you're together at home, you're together in the car, you're together at the office. And it's like, no, no, no. I mean, you can love someone, but you got to have your own separate space.
Well, I think the question to start with, Lisa, is because not everybody understands the fractional concept. So what is a fractional chief financial officer?
It's when when a company is growing or has reached a size where it needs some additional help, some additional, financial acumen coming in. And but a CFO at a certain level is very expensive, and maybe you don't need one full time. You need that help one day a week, one day a month. It can vary from a certain number of hours to a certain number of days a month. And you don't need a full-time person, nor can you afford a full-time person, or it would be a not an efficient use of your cash. And often privately held companies have incredibly good staff. I mean, the staff at privately held companies, the bookkeepers, the accountants, the controllers they know the business extremely well, but they're so tied up and busy in the weeds and what they're doing. And they may or may not have had, and often have not had the experience for the more global strategy, big picture look, maybe some of the finance, debt covenants, some of the other things that a fractional CFO can bring by coming in and looking at the company with a different pair of eyes. So it's a very efficient way to bring in that expertise when you need it without hiring a full-time person.
Yeah. So what is the process when a client hires you to come in to help them in the financial space?
It depends upon what exactly they're looking for, but generally, the process would be to come in and kind of understand the company. I would come in and look at their financial statements. Are their financial statements being prepared just as a matter of fact, maybe because of its compliance and they have to? Are they being prepared in a way and in a timely fashion so that they're using them to make business decisions? I want to see what the financial statements, what the process currently is. I look at their receivables. Are the receivables starting to age? I look at their payables. Are they using payables as a good way to manage your cash flow? Look at the clients. Do they have heavy client concentration? Are they at risk because they have one large client or two? And if they lost that one or two, that could materially alter their business. Those types of things. I do look at taxes. Are you filing your sales tax, your state income taxes, your federal income taxes? Look at those as well. And then just sort of assess the business as a whole as to where they're at. One of the main things I'm focusing on, if it's just a general CFO role, is really the relevance of the financial statements. Is the owner using the financial statements to make good business decisions? Often owners know what they do. They know the manufacturing, they know the sales, whatever their product is. And as my husband would say, I mean, he did the manufacturing and I did the financials. He really never, until we did the company together, valued the financial information. He thought, well, it's something we have to do in the past, because he's been involved in other ventures prior to us starting our own company together. And he saw it more as just compliance, something you had to do for tax purposes. But he will even tell you now he understands the fact that now he could get good financial information. He could see whether or not a product line was making money, and use the financials to make those business decisions and help you drive better decisions. And so looking to see what it is that would make a business owner and the management team be able to make more accurate financial decisions, make them more quickly, to drive the business where it needs to go. I can be incredibly great, but you have to be doing something for me to be good at what I do. I mean, I need you got to make the sausage for me to make it better.
Right. Exactly. What are some unique challenges? Because I would assume you work with the privately held companies more so, right? Because of the
Yes.
size. So what are the unique challenges in the privately held space?
The challenges are primarily time to a large degree, because as I said, the owners are so focused on growing the business and making sure that everything's going right in their plant or whatever type of business it may be. That's their primary focus, and that's what they know. They're not accountants, they're not financial people and executives. And just finding the time and carving it out to take a step back and look at their business. And ultimately, when they do, they realize that that having that information can make them make their lives so much easier. But when you've never done that and you've never actually looked at the financials and used it, just that initial carving out a bit of time to understand how it can make your life easier.
Yeah, I think that's the biggest mistake I've seen with companies that hire fractional CFOs. One, they think their controller can do the job, and then two, they hire someone who says they're a fractional CFO, but they're really a controller and
Yeah,
really don't
yeah.
have the depth of experience. What do you think is the kind of top two, top three most common problems you see when you walk in the door of a new client?
Many times clients have not really spent any time thinking about job costing or product costing. I had one client that was actually losing a bit of money, and they had two product lines, and they really didn't know which product line was more profitable. Were they both losing money? Was one profitable? Was one really losing a lot of money? And what owners can do is you can actually sell yourself out of business. If you're selling a product line or pushing a product line that is actually costing you money and reducing your margins, the more you sell of it, the worse it gets. And job costing gets a little bit of a bad rap because in the accounting world, it can be incredibly precise. But the great thing is, like, I understand, and so many CFOs at ExecHQ have worked in the business world, have been entrepreneurs, and we understand you can't let, what's the say? You can't let perfection be what is it? I can't let perfection be the enemy of good.
Right.
And so in a perfect world with a large, Fortune 100 company, you would do all these things in job cost accounting or product accounting. But in the privately held space, you have to go in and at least start the process to understand what it is, how you're pricing your products and what your costs going into them are. And it doesn't have to be perfect, but the more you dig into it, the better it gets over time. And so many privately held companies really have not taken that step to understand their product mix and the cost associated with it. And that can be a huge hurdle to margin growth anyway. So that's one. I think utilizing the cash flow and understanding, receivables and payables. I mean, there's a little bit of strategy that goes in there. What are you, what are you extending, and how are you collecting, and just kind of following that. But the other thing also is clients that start for the first time, they've reached a level where they start getting some bank debt and they have bank covenants, and they really don't understand some of these bank covenants and these ratios that get put into the debt covenants. And once you have a debt covenant, you need to start doing some forecasting to make sure that your forecast show that you're going to be able to meet these debt covenants. Because if you're just doing it on the back end, it's like, oh, it's once a quarter, I need to report to the bank. Oh, we missed our debt covenant. That can be an event of default. You need to know that ahead of time and kind of always be a little bit ahead of it. So I really think once you start getting debt with a bank, you really need to have a fractional CFO or someone with financial acumen to come in and make sure that you don't accidentally stumble. And the bank will often, work with you, but it's going to cost you some money to do that, to revise those covenants.
You use any kind of assessment tools when you go into a new client? What is that process like?
Well, we have a couple of different tools that we can use, and we have two different assessments that we can use. But one assessment tool we use is we go in and we visit with the owner and go through a list of questions where they answer certain types of questions about how they feel about certain areas of their business, things that keep them up at night. And there's a whole tool that we go through, and they answer these questions, and at the end we generate a report, and that report kind of tells them a little bit more about their business, some areas that they might have some weakness in. But the other thing it does for me and for the other fractional CFOs or any of the fractional folks that you utilize is it gives us greater insight into the business, what keeps the owner up at night, what he's worried about, how he or she feels about the business. And then you can actually compare that to when you go in and you look at it. Well, the owner feels really good about this, but I'm seeing these other areas. Or the owner feels good about this, and I feel good about this. Those types of things where you're gauging how they feel at their gut with what you're seeing, certainly helps you.
Yeah, what I love about that approach is, you would expect, a CFO to go in there and do the quantitative metrics, but the qualitative is fantastic because it gives you that gut check in terms of how, like you just said, how they're feeling versus what you sense what they're feeling, right? And it just verifies that. Yeah.
Well, yeah, and they're the client, and we need to make sure that we're addressing. I mean, it's off easy as an accountant to go in with my list of what I think needs to be done, but we need to handle what the client is worried about, what the client feels like needs to be done. That's really the key. And then if we discover something that is an issue for him, make sure he or she understands it. But understanding the client, the owner's perspective, and what they need to do is definitely paramount.
Yeah. Um, You have some fantastic accomplishments, Lisa, and we'll publish your link to your entire bio in the episode notes. You were 2017 one of the top CFOs in Fort Worth. That's fantastic. I mean, obviously, a award for jobs well done type thing, and companies and the impact. But what do you think is your superpower when you go into a client? Like, obviously, you're such a good CFO, but what separates you think?
Honestly, I think it's because I've walked in their shoes. I've been an entrepreneur as well as in a family-owned business. And I mean, I'm not dinging consultants that have never that have only been in consultancy practice because they bring their own set of skill sets. But I will say that something that differentiates me. When I've talked to many clients, there's a little bit of a fear sometimes or a hesitation about bringing a consultant in, about perhaps a little bit of judgment. They will expect me to do things this way, the way a Fortune 100 company would do, and we're just not able to. I know, I mean, I've started and been in a business that has grown from 2 employees, up to a multi-million-dollar business. I understand that when you come in and there are certain things you want to put into place, what the practicality is. I understand what it's like to stay up at night worrying about making payroll. I understand what it's like to worry about a client loss. So having actually and literally walked in the shoes of an entrepreneur and an owner, as well as being in a small to a medium-sized privately held company, the application of taking something that you need to do from an accounting perspective and putting it into a practical level for the size of business that business is something that I think sets me apart, or maybe makes it just an easier conversation, perhaps. Yeah, but I'd say that's my superpower.
Yeah. Anything else you would like to say about being a fractional CFO?
just don't wait. I mean, I've never had a client they've always said, and not just me. I mean, all of my colleagues, so many of their clients have said, "I wish I had done it sooner." Yeah.
Yeah. Yeah, I can totally see that. Having worked at numerous startups over the course of my career, we always waited too long to hire, really powerful experience, C-suite executives to
Well, and that's the great
criticism.
thing about the fractional role is that, you don't have to hire and bear that overhead, which can be, a bit daunting if you go the fractional route, and let us help you grow until you need a full-time CFO, and then we can help you, find that right person. But, it's a good cost-effective way to go.
Well, Lisa, I love your energy. Of course, you're from Texas, so everything's better down there, and you're one of the best CFOs in Texas. So there you go. But thanks for being on Executives on the Front Lines today.
I appreciate it, Jeff. It's been fun.
Thank you for listening to this episode of Executives on the Front Lines. If you are interested in learning more about today's guest, you can schedule a 15-minute call with them by scanning the QR code or using the link in the episode description. Please join me every 2 weeks to learn from another great leader sharing insight that can help you and your business.